Good afternoon, everybody, and welcome to another Wall Street Reporter interview. Today we have a very special guest. We have Dr. Marc Faber. He is the editor and publisher of the Gloom, Boom, and Doom report. That's the website is gloomboomdoom.com. Check the link down below so you could learn more about this. Marc, welcome.
Well, thank you very much for having me on your program.
Marc, right now is actually one of the ideal times to speak with you because you have a very interesting perspective on world events, markets. So, what's your take on what's happening in the world right now? Obviously, we're talking about the coronavirus situation and Asia.
Well, I think to put it in a longer term perspective, we had essentially the great financial crisis, and after the great financial crisis, we had various QE programs in the US that led to a recovery. And then we also had balance sheet expansion in Europe, in Japan, in China. I mean, everywhere the central banks basically, in good English, printed money. They didn't print it physically, but they went into the market and they bought assets, mostly bonds, government bonds, but also some mortgage-backed bonds. And in the case of the BOJ, the Bank of Japan, they bought also equities. So that then propelled asset markets higher, and it created an economic recovery. Not very strong for the average person because, as you know, when you have asset inflation, some people benefit a lot, the people that already owned assets, and other people who don't own any assets, and approximately 50% of the US population has practically no assets to speak of. But anyway, it created this wealth inequality. Now, about 9 months ago, the global economy began to slow down, partly because there was a slowdown in China already. If you look at car sales in China, well, they just announced that they plunged by 80%, 80% in February. I find this I find this as an event that belongs into financial history books, when 80% of your car sales collapse. But what happened is actually already for the last 18 months, Chinese car sales were down. It's not something new. It's new that it fell by 80%. The same.
And these are real numbers.
Arrivals in Hong Kong. Hello?
Yeah. These are the real numbers.
Yes. And so we can say the global economy was slowing down, say for the last 9 to 12 months. And then the coronavirus occurs. And I don't know whether it's because of social media or because the psyche of people is very fragile. We had, although the number of cases or of people that die is relatively small, there's a bigger chance that you walk out of your door and that the car runs you over, or a runner on his bicycle or motorcycle,
or lightning,
that you will die of coronavirus. But I think when people see how the sick people are treated and how they are isolated, like in a quarantine on a cruise ship or so, I think they have a horror to catch it, and so they don't want to travel anymore. They don't want to go to large events like soccer matches or football matches or concerts, conventions and so forth. And we have to also see one thing, the corporate sector, they are in a frame of mind of cutting costs. And they've been in that frame of mind frame for the last 10 years or 15 years. So they see now suddenly an opportunity, can go to the employees. Oh, you're a very nice guy, but you're no longer going to travel for now. And the corporations, there's also a widespread trend for people to work from their homes. This has happened for the last few years. There's more and more people working from home. The companies can tell employees, you know what, you can work from your home, and if the performance is good, then okay, and otherwise they fire them. But basically, a corporation can save its entire office space in expensive locations in downtown New York. I mean, your job, I think you could perfectly do your job from your house in the countryside.
Sure. Do you see any long-term impact on business society from this event? I mean, we're already seeing the major trade shows have been canceled. I think which is the Swiss really started this. I think when they started canceling all the trade shows this month. What do you think
I
is
think
going to
we
be the
had
long-term impact?
cancellations in Hong Kong. We had a lot
Yeah.
of cancellations in Hong
Oh
Kong.
yeah.
And yes, the automobile salon in Geneva was cancelled. But before that, and this is interesting from a business point of view, you see Morgan Stanley, they have annually around this time of the year a conference in Hong Kong. They cancelled it and they made it into a video conference. In other words, the speakers appeared, but it was essentially not in physical form. And I think the future of conferences will be that nobody actually attends the conference like we speak now.
Right.
Okay?
Right. Virtual.
Someone can download our video at the time that suits him, in the evening, in the morning, when he's in the shower or whatnot,
Yeah.
and does not have to go and travel and be in physical presence at the conference. I think it's much more convenient.
It's funny
If you send
yeah.
me a video of a conference and there's say 10 speakers, if you go and listen to the conference in physical form, you have to listen to maybe 10 speeches in one day.
Right.
By the afternoon, you're dead. You're already dead after one speech because normally they're so boring.
It's funny you mention this because we used to do physical conferences. Companies, CEOs would get up and one after the other, 10 guys, and now we're doing everything live stream. We're doing these live stream online events, and it actually works better because we get actually a much larger audience. Sometimes we have 500 people, and they pay attention because when you have the screen in front of you, it's like you're not distracted by people.
Absolutely.
Yeah.
Moreover, you can always have a beer.
Yeah, you have a beer, smoke a cigar, whatever you want. Right? It's a great it's a great
Yeah,
thing.
sure.
So,
So there's a whole industry, the hospitality and travel industry, that in my view will no longer grow as fast as it did before. And number two, the video conferences will also be applied to board members, board meetings of companies. This is a huge industry because the board meetings of directors, this involves people traveling, staying at hotels, always in luxury, of course, and eating well and dining well. This has a huge impact on a restaurant. If the businesses no longer go to restaurants,
that's interesting.
They're going to be half empty. So I think this is the big thing, and there are companies that will benefit. Zoom video communication is one. I'm not recommending the stock. I have no idea about the business and so forth, but it's a great way to communicate.
Now? Are you in Hong Kong or Thailand right now?
Right now, I'm in my office in Thailand, and my office in Thailand is built essentially 30 meters away from my main house, where my wife and I stay.
Okay.
Luckily, my wife is most of the time not around. She's prefers to live in Bangkok, but basically we have a living house and then have this office.
Yeah, the reason I ask is that I just read that you have obviously you got the coronavirus thing, but now I just read this morning that you have the demonstrators are actually they're setting off bombs now, so it's a big escalation from what we had a few months ago with just umbrellas.
Yeah, sure.
What do you make of
Well,
this
the Hong Kong
situation?
demonstrations are very different. This is a complex issue, and I can't talk about it in details because it would take a long time. But in essence, there are some events that occurred lately where you ask yourself, is someone really trying to embarrass China and to give them a hard time? The demonstrators in Hong Kong, they clearly got money from someone. I concede it could be someone in China that wants to destabilize the government of Xi Jinping,
Right.
but it's more likely to come out of the US. And there is evidence that the demonstrators have been in touch with some people in the US. Very clear evidence. This is not a kind of a fake news or a conspiracy theory. This is a fact.
Okay.
Number two, we have the trade war.
Right. Right.
And suddenly we have this virus. The virus didn't come. I mean, you have to believe in Father Christmas if you think that the virus just came out of a market that sold bats and rats and other animals in China. The virus probably has been kind of engineered. It came probably out of a lab. Now, who did the virus come out of the lab by accident or intentionally? And if intentionally, by whom intentionally? Right. So we don't know.
Right.
That we don't know. We can have all kinds of theories. But it's highly contagious. And as usual is the case, these international organizations like the WHO are completely useless. It's a pandemic already. It's not kind of a little virus floating around.
Yeah.
And it's spreading at a very high speed. I mean, I've written about this, about the pest in the 14th century in Europe. The spread lasted 2 years because the pest, the virus of the pest, was carried essentially on ships. So the first people that got the virus, it came into Europe through the port of Kaffa. At that time, the Kaffa port in Crimea was part of the Genovese Empire, Genoa in Italy. And so it spread through the Mediterranean and then up the coast to Britain, Germany, and the Nordic countries. Inland, there was less of a problem. But I just like to say, the pest wiped out 30% of Europe's population.
Yeah.
And it took 200 years to replenish the population to that level.
Yeah. Mark.
And when the conquistadores went to Mexico, Cortes, he brought along the smallpox.
Right.
Before his arrival, Mexico had a population of 25 million. After they left, I mean, they were there for a long time. But basically, the population of Mexico dropped from 25 million to 5 million.
I didn't know that's a big number. But Mark, it seems like every decade, there's a major shift. Each start of every new decade, we see, complete change in the world. Like, we had the Berlin Wall right around 1990. We had, 9/11, the dot-com bubble, the housing crash, 08 to 2010. So we're at the start of a new decade right now, and it's an inflection point. So what do you see happening in the 20s? Is this going to be the Roaring 20s again? Will history rhyme?
No, I don't think so. First of all, the Roaring 20s began from a different set of conditions. We had World War I, and then we had a period of adjustment after the First World War, but it was a period of the rise of the United States. We have to see this very clearly.
Yeah.
Britain was left behind to some extent, and Germany suffered the high inflation period in the 20s. Then they recovered after 1924. But basically, we went in the US with stock prices very depressed after the First World War. And then we had major inventions in America, including essentially consumer credit that boosted consumption dramatically. And so we had the roaring 20s. Now we are going into the decade with the stock market having been actually tomorrow in a 11 years bull market. I mean, if we are saying we're still in a bull market, we don't know whether this is the beginning of a bear market. I think it is, but let's say statistically we would still be 11 years in a bull market, and in 3 months we will be 11 years into an economic expansion. By any standard, these bull markets and these expansions of this length is most unusual. We have lots of imbalances in the world. We have credit at the record high. We have the stock market as a percent of the economy at the record high, as well as the bond market. So the conditions are very fragile. And now in this very fragile economic system that we have, that was also partly brought about by central banks' policies, we have a major event. This is a major event. Now, you can argue, well, SARS was also a major event. Yes, but it was not all over the world. And tourism did collapse, but it recovered right away. This coronavirus, I doubt that will have right away a huge recovery. For the reasons I said, the corporate sector is quite happy that their employees don't travel anymore all over the place. Because when I was working for Wall Street firms, I always went for the weekend somewhere where I had a client, so I could have a good time and see my clients at the same time.
You know, Mark, it's interesting. You said earlier that probably the biggest fear of people is not so much catching the disease; it's being locked up in quarantine.
Precisely. I think if you tell me, you can go anywhere, but the risk is that somewhere at an airport, someone will say, yeah, come over here, and then you're locked up in a home for cuckoo people, or in a home with people like Trump, or the politicians, you understand?
Yeah.
I think there's a huge fear of people like to go into some kind of a prison for no other reason than because you're sick.
Yeah, exactly. No, it's interesting though. But in all of this, Mark, where do you see? I mean, you're the congenial contrarian. So where do you see the opportunities right now in the market?
Well, right now, to tell you the truth, I think the opportunities are more limited for the simple reason. Stocks on any standard of historical valuation are pricey. Now, if you tell me, yes, that is true for some stocks, they're very expensive, like the Nifty 50 were in 1973, or the dot-com stocks were in the year 2000, correct, or the Japanese banks in the year 1989. But there are stocks that are also cheap, that I concede. The value companies have underperformed the market dramatically for the last 10, 15 years.
Yeah.
Now, value is principally resource companies. BHP, Freeport, McMoran, Newman, and so forth. And the oils, all the oil companies fall into the category of essentially value stocks. The banks are value stocks. And tobacco. Now, the problem is that all these industries have dark clouds overhanging them.
Yeah.
You know, now because of the coronavirus, the stupid discussion about climate change has been pushed a little bit aside, and we don't have to watch Greta every day on TV somewhere. So that is the good aspect of coronavirus. It's a big competition to the climate change crowd.
Right. Right.
And but these companies that are value companies, they have clouds overhanging them, and some have actually, you know, if you look at the performance of, say, the oil stocks or some of the basic stocks that are very cheap, they actually have performed even worse than the growth stocks recently in this sell-off.
You
You know, I can
mentioned
say airlines.
you
The
mentioned
airlines are value stocks, but
yeah.
the airlines have performed horribly.
You mentioned the climate thing, and apparently, I'm sure a lot of people are kind of learning this is that a lot of big institutions are divesting the energy stocks because they think they're seeing this as they are they're comparing them to like the tobacco stocks because of this climate change
Yeah, yeah, sure.
thing.
But also, there are some very wealthy people that essentially support clean energy and so forth. And a lot of these people are going to sue the oil companies. Now, in theory, the tobacco industry got away with a very costly settlement,
Yeah.
but it didn't kill them. But in the case of the oil industry, I can tell you some of the lawsuits could essentially mean that companies like Exxon and so forth, they don't have money to pay dividends.
That's an interesting perspective.
So I think there are lots of changes occurring, and there is some value in emerging markets. But if I look at Asia, I can tell you there's no hurry to buy the Asian markets. They're not cheap as they were in 2009, and the outlook for earnings is poor, very poor. Then you have, as an asset class, bonds. So let's look at the bond market. The 10 years treasury, and I've been bullish about treasuries for the last few years, the 10 years treasury is now at less than 1%. Now you may say, well, it's not attractive. I agree with you, it's not attractive, but it's more attractive than a Greek bond or a Swiss franc bond. The Swiss franc bond, the 10 years, sells at 115 with a zero coupon bond. So today I'm buying a 10-year Swiss franc bond. I pay 115. In 10 years I get 100 back. Is it good value?
I don't understand the value proposition. I mean, you basically like, and so people, so there is actually zero interest rates right now in.
Yes, we have negative rates.
Yeah,
negative
rates. Excuse me.
In the euro area and in Switzerland. But you understand there are some reasons why people buy these bonds. First of all, in Europe, and probably also in the US, insurance companies and pension funds, they must buy with a certain portion of the assets government bonds.
Mm-hmm.
Have no choice. They must buy. They must buy them in local currencies also. So this is one reason they buy. Number two, it's not the way I'm thinking, but in theory, if I would say to you, look, everything will collapse by 50% and more, and therefore I buy 10 years Swiss franc bonds because they will only decline by 15% over 10 years. You understand?
Yeah.
This is the way to look at things.
Yeah.
If I would say to you, I think everything, real estate, stocks, just about any asset will drop by 50%. In a deflationary collapse such as we had in the Great Depression, then I think it's a very good value to buy an asset where you only lose 15% over 10 years.
Mark, what's your take on gold right now? Are you bullish on the precious
Y-
metals?
Yes, but I've been positive about owning some of your assets in precious metals for the last 25, 30 years. But I, you know, the gold market or a stock market moves in phases. We have a rallying phase, correction, rallying phase, correction, and so forth. And I think we are a little bit in the over enthusiastic phase of the gold market. In other words, every Tom, Dick, and Harry thinks it's good to own some gold. I think we need some shakeout. We had one last Friday when gold tumbled, and I think this is the beginning of a kind of a correction phase. I'm not selling my own gold because I'm a long-term holder.
Right.
I don't think I will ever sell it unless I have to. If I go bankrupt, then I will take my gold bars and try to get some money from them.
Yeah, but gold, like especially in the U.S., I think Americans right now are historically, as a percentage of portfolios, they're really underinvested historically. And most I think now the new craze, especially with these with the millennials, is the Bitcoin. So they see Bitcoin as the
Yeah,
as the
yeah,
safe
yeah,
haven.
sure. I mean, I'm in favor of having a diversified portfolio. So you have some stocks, some cryptos, and some precious metals, and some bonds, and of course some real estate. But I'm well. Let's put it this way: either bitcoins and Ethereum and what not they are called will go ballistic. It's possible. And I'd say the coronavirus is actually favorable for cryptocurrencies. And let me explain why. The virus can be transmitted on the surface of something,
Yeah,
right? So, what is touched by every Tom, Dick, and Harry in a society many times a day? A banknote. A banknote people touch, they give it to you. It
it's
goes into a
very
shop.
dirty. Yeah,
You go shopping in a shop, they give you back money,
yeah.
and so forth, unless you pay with credit cards. Now, in America, they pay a lot with credit cards, but say, I pay mostly for cash. And so, in my view, this crisis could be used by central banks or governments to say, okay, uh, the contagious risk of banknotes is very high. Let's abolish coins and banknotes and introduce whatever crypto or just prepaid cards or whatnot.
Yeah, electronic payment. Yeah, that's pretty interesting. What Mark? Let's talk about your newsletter. So anybody in our audience can check it out. Can you tell us about like what's the newsletter all about? What are some of the services you offer? How do people check it out?
Well, I used to manage money, but now I don't want to manage any more money, uh, partly because this is one problem for the economies around the world. The regulatory environment is so difficult. In other words, you need lawyers, you need accountants, and so forth and so on. And so, unless you have a very big organization, it's actually not worth to have it. So, that has been a headwind actually for any kind of business. The regulatory environment, which under Mr. Trump, to be fair, has become somewhat better, but it's still very bad. I mean, you try to open a restaurant, you will see what the problems are. Anyway, uh, what I do is essentially I provide investment advisory services, mostly for institutions, and I issue two letters. One is the Gloom, Boom, and Doom report. It's a printed letter. It goes out by mail, the
Physical
old
mail,
way. And then I have a website report that goes out by email.
and it's gloomboomdoom.com.
Yes. And it deals, what does it deal with? It deals with anything that I think is a little bit unusual or that catches people's interest. Occasionally it's about geopolitics, and at times it's about an economy, a country, or a sector in the market. Or I've written about professional gamblers also in the past, and now I've written about this how plagues can have a huge impact on society, because I've always been interested in history, the role plagues have played in essentially
Right.
tilting the odds. You know, without bringing the smallpox to America, the Spaniards, the conquistadores, it's unlikely that they would have been able to defeat the Aztec Empire
Sure.
or the Inca Empire. It's not very likely. With 500 people, they went over with like 500 people, and these were large empires, well organized, relatively modern. And the cannons the Spaniards had, they were not very useful. I mean, in combat, because they were very slow at the time. So anyway, to make a long story short, plagues have always interested me. And that's why this coronavirus has kind of caught my attention and interest.
Yeah, I think if I'm correct, the book printing, the printing industry started right after the plague because from all the people that died, there was all these rags, clothes that were no longer used, so they were able to turn all those rags into paper, and that
Yeah,
kind of
sure.
fueled the explosion of the printing industry. So there's always a positive side to everything.
Yes.
But on that note, Mark, I want to thank you, and we look forward to having you back soon.
Well, thank you very much for giving me the opportunity. Bye bye. Take care.